So we all know about big tech doing tremendous. We all know that story, right? I mean, these stocks have been doing excellent this year, right? But something is starting to occur that is, let's just call it very surprising. So every day, pretty much, very shortly after I wake up, right? Usually I go on to TradingView, right? Monday through Friday. And I have a ton of different watch lists on TradingView, but my main watch list, it looks at the indexes I have on there, and then I have my current stocks. And so I click on that, and then right away I click this little tab and I go to, whatever the percent changes. And the reason being is, once I get into the market, I care more about whatever stocks I'm holding that are making outsized moves up or down on that given day, right? So I can just kind of see, why is this stock going up so much or down so much, and then kind of review it. Well, today I noticed something very, very shocking, and this is what I noticed, okay? I go to my biggest underperforming stocks and overperforming stocks, and there wasn't really much happening with the underperformers, but the overperformers. Look at my top 5 stocks here today, right? Fubo, 18% move here today. What's going on with Fubo? Avant, a 10% move here today. Palantir's an 8% plus move after the move Palantir's already had. Corsair Gaming's about a 6% move here today. What's going on there? And the Planet. Those are my 5 best stocks here today. Okay, that is very surprising, especially on a day when I was taking the screenshot, the S&P 500 was actually red. And so this is very, very telling of what's going on here, okay? Now, first off, Fubo, right? What is going on here? The stock's up 165% in the past 3 flippin' flapjacking months. Does somebody know something, okay? Stock's up another 18% here today. They got earnings coming up on Friday. Who's buying all these shares going into the earnings unless they have some sort of material information? Because to send the stock up this much, this fast, is very surprising, especially when the company has earnings coming up here in a few days like that. That's a big risk, right? And you say, well, why not just buy options? If you're confident that the move's going to be the upside, why not just buy some options? Why are they buying shares straight up and sending the stock up like that? It's very, very surprising, right? And you look at the volume. Now, I took this screenshot about, because this is a pretty long video, so it took me a couple hours to kind of prep this one, right? When I took this screenshot, there was still almost 2 hours left in the trading day, and almost 28 million shares had traded hands. The average volume for Fubo is about 15 to 16 million. Okay, so it shows you something's going on here, and it's very surprising because here we are with the situation, and this is before football season even starts for Fubo, which football season is always the huge boost up for Fubo, because obviously, it's the main service you got to have if you're a football fan, especially college football, but even NFL football, they got the best package for that out there, right? And so here we are, we're still a month away from football season, and the stock's making this sort of move. But there's some interesting things. Maybe somebody knows something about the numbers, and so they're trying to get ahead of that. Or maybe somebody knows something about some sort of potential buyout or something like that. Because I will say, of companies, smaller cap companies I know of, this is probably the most attractive buyout candidate out there, in my personal opinion, because it's a streaming player, right? It's the future of TV, right? There's YouTube TV, then there's Fubo. Those are really the future of TV, because obviously a lot of people are getting rid of satellite, cable, they want a streaming service, right? And so there's a lot of buyout candidates, that would be looking at a company like Fubo. This could be satellite companies. This could be typical old cable companies. This could even be a company like an Amazon, right? We know Amazon's not shy at all about buying out, let's just call it assets that they could see as long-term, very attractive businesses, right? And we know Amazon's very focused on trying to get more and more into streaming and more into entertainment. You look at what they're putting out with Amazon Prime. You look at them starting to buy different rights for sports, obviously with Thursday Night Football, things like that. Could Amazon make a play here? It's definitely a possibility. And, you would say Fubo's a money-losing company right now, but obviously they're cutting losses dramatically, and Amazon's not afraid to lose, $100, $200, $300 million a year on that business when the revenue opportunity is what it is for this company long-term, right? You could even look at a company like Apple. Apple seems like it's getting more and more focused into sports. Now, usually Apple just starts their own service of some kind, unless there's some sort of strategic idea there, kind of like what they did with Beats, right, where they acquired another brand and then just continue to build that brand. So there's a lot of players. I don't know, man, but I will say that it's very strange to see that stock making that insane of a move. because I couldn't find any upgrades from any analysts or anything like that. So it just felt like, does somebody know something? I've talked a lot about this stock over this past month. I call this stock the easiest money in the stock market right now. Easy money meaning it has such a high probability of doubling over the next couple of years, at least doubling, and has a very low probability of going down in any substantial way, okay? And if you don't know that stock and you regularly watch this channel, what the heck, you should know this one, okay? First stock of these 5 up here is PayPal stock. Yes, PayPal is the easiest money in the stock market, in my personal opinion, right now, okay? So PayPal, what's going on here? Well, first off, it's very important when you understand PayPal, you're buying 2 of the most important finance-related apps in the world, right? If we look at just the United States iOS App Store, 2 of the most popular finance apps on a daily basis are PayPal and Venmo. PayPal owns both those apps, right? The only thing that's usually more popular on a download basis is what it's called Cash App, which is owned by a company named Square. Now, a lot of people think, okay, I buy this company, I'm getting PayPal, Venmo, great, right? You're getting a whole lot more than that when it comes to PayPal. You're getting this company called Braintree. Now, this is a back-end kind of payment processor that in order to run any sort of business, right, e-commerce business or an app or anything like that in which is doing transactions, you need some sort of payment processing so you can do those transactions, right? And so think about all the big apps used on a daily basis, whether it's, I don't know, Uber Eats or DoorDash or whatever it is, okay? At the end of the day, somehow those transactions have to be run, right? And this is where Braintree comes in. And so if you want to pause the video and look at all the different customers, Braintree has its pretty phenomenal, and I could almost guarantee you there's more customers than this, just some probably don't want to show their names there and things like that, okay? And when it comes to PayPal, here's why I'm stealing money in regards to PayPal, okay? Here's the deal. This company is trading right now at about a 13 times next year's numbers, okay? Now, keep in mind, the market in general trades at maybe an 18 to 20 range. Now, a company like PayPal should be trading at a 30 plus, like in the 30 to 40 range as far as the forward P, based upon the industry they're in, how safe their business model is, and the fact that they have a substantial revenue growth coming for many, many years to go in the future. So this company could double tomorrow, and it would still be an undervalued stock. This stock could go to $150 a share, and it would still be undervalued. That's where things get very, very appetizing when it comes to PayPal stock here. Now, the other interesting thing is, analysts only have this company growing about 7.5% this year and about 9% next year. Both those numbers are low, in my opinion. I think PayPal is going to come in with double-digit growth, very strong double-digit growth in the back half of this year, and then double-digit growth again next year as well. I think just analysts have gotten way, way, way too bearish in terms of revenue on PayPal. The e-commerce space has been in a recession. Let's just call it what it is. It's been in a recession for, about a year, and it's going to come out of that recession in the back half of this year in terms of the space in general, and you're going to see PayPal's numbers boost up in a pretty substantial way. I'm talking across PayPal, Venmo, and across the Braintree platform as well. Now, there's been one major holdback of the stock, other than just analysts being far too bearish on it and the valuation just being on the floor. It's a major holdback. And that is the fact that the CEO is stepping down from the company at the end of this year. Okay? Now, the reason this is kind of a holdback is we don't have the new CEO announced yet. Okay? Now, they're going to be able to bring in my opinion, a top tier next CEO for PayPal. I don't think there's not a better job opportunity in the world right now than being the PayPal CEO. There's no opportunity because Apple CEO Tim Cook, he's still going to be there for a bit. Microsoft CEO is still going to be there for a bit. NVIDIA CEO Jensen's not going anywhere. Elon Musk is not going anywhere from Tesla. So you run through all the biggest companies. All their CEOs are set for quite a while. Now, in terms of PayPal, where am I going to buy this stock to? What am I looking at here in terms of that, right? And where will I potentially sell the stock at? Well, in terms of buying the stock, I'm planning to buy the stock all the way to $150 a share. Now, this is why I believe I have the remainder of this year to buy PayPal stock. I do not believe PayPal is going to 150 by the end of the year. It's always a possibility, and especially when you see moves like have happened in Meta, NVIDIA, stocks like that. By the way, this is the easiest money I've seen in the market since I saw Meta, obviously, in Q4 of 2022. But I think it's a pretty low probability the stock over doubles up by the end of the year. So I think I have the rest of this year to buy the stock. And I think I have potentially the first half of 2024. Potentially. I'm a little more concerned with. I think for sure the stock will be under 150 for the remainder of this year. Next year, I'm a little concerned about that because by that time they'll already have this new CEO announced. I think the growth rates will already be out there, and people will start to look at this company very differently than they're doing now. Okay, I would consider selling at 300 plus for this stock. Okay, and when it comes to PayPal, I really look at the stock and I'm like, there's no real reason for me to jump out of this anytime soon. When it comes to PayPal, it's just easy money for me over the next several years.